Welcome to Financial Market Insights for Traders, the show where we cut through the noise and talk about what really matters in global markets. I'm your host, Sophia, and today we're going to tackle one of the most important and often overlooked moments of the investing calendar: year-end portfolio rebalancing. It's the end of 2025. Markets have been unpredictable. Inflation is easing, interest rates are shifting, tech has boomed, and geopolitical uncertainty has kept everyone on their toes. Whether you're a seasoned trader or someone managing your own investments, this is the time of year to take a step back and make deliberate, informed choices about how your money is positioned heading into 2026. And trust me, year-end is not just an administrative task. It's one of the most strategic moments of the year. Today, we'll go deep into what makes rebalancing so important, walk through a detailed checklist you can follow, and look ahead at what analysts are forecasting for 2026, because the economic backdrop you're stepping into next year matters a lot for the decisions you make now. So, settle in. This episode is going to be your year-end roadmap: practical, clear, and forward-looking. People often underestimate how much their portfolios drift over the course of a year. You might start January with a clean, balanced strategy, say a mix of 60% equities and 40% bonds, but by the time December rolls around, the markets have moved. Suddenly, that balance has shifted to 70-30, maybe even 80-20, especially if stocks have outperformed. That's not just a number on paper. It's a change in your risk exposure. You might be taking on way more volatility than you realize. That's where rebalancing comes in. Think of it as recalibrating your compass. You're not chasing the latest hot trend. You're realigning your portfolio with your long-term goals. And at this time of year, it can also mean locking in gains, harvesting losses for tax efficiency, and preparing for the next market cycle, not reacting to the last one. When you do this in the fourth quarter, you're taking advantage of a moment when markets are liquid and institutions are repositioning, which makes your own rebalancing smoother and more strategic. Let's walk through how to do it thoughtfully. Your year-end checklist, if you will. Start with performance. How did your portfolio actually do in 2025? Did it meet your target returns? Were you rewarded for the risks you took? If your performance lagged, don't just shrug it off. Look closer. Was it sector exposure, market timing, or maybe you were too concentrated in one area? Understanding why you performed the way you did is the foundation for any intelligent adjustment. Once you've got that clear, check for what we call allocation drift. Even small shifts matter. If equities have run up and bonds have lagged, your risk balance has changed, and so has your portfolio's behavior in a downturn. Rebalancing here means trimming some of your winners and redeploying into undervalued or defensive positions. It's not about guessing what'll go up next. It's about discipline. Next, think about sectors. Tech, artificial intelligence, defense, and renewable energy were the big winners of 2025, but too much concentration in any one of them could hurt if momentum stalls. Make sure you've still got exposure to the basics: consumer staples, healthcare, even some cyclical plays that might benefit when growth stabilizes next year. Now, a lot of investors are still overly focused on the US market. And yes, it's been strong, but look beyond your own borders. Emerging markets, especially in Asia, are showing real promise. India, Southeast Asia, and some frontier economies are benefiting from currency stability, infrastructure investment, and young, growing populations. If 2026 plays out the way many economists expect, those regions could outperform. A global perspective adds both resilience and upside potential. And we can't talk about year-end planning without mentioning taxes. The end of the year is the best time to make your portfolio tax efficient. That could mean selling underperformers to offset capital gains, donating appreciated assets to charity, or just being mindful about where you realize profits. Small tax-smart moves can add up to real performance improvements over time. Then there's fixed income, which, after years of being boring, is finally interesting again. We're heading into a rate-cutting cycle. Most forecasts suggest central banks will begin trimming rates in 2026 as inflation continues to ease. That means bond prices could rise, especially for longer maturities. So, if you've been hiding in short term bonds or cash, it might be time to rethink your duration exposure. And while you're at it, take a look at how your dividends and capital gains distributions are being handled. Instead of just letting them automatically reinvest into the same assets, consider using that cash to rebalance deliberately, maybe into sectors or regions that have lagged but have room to grow next year. Finally, take a step back and reassess your personal situation. Your financial goals, your timeline, your risk tolerance, these things change. Maybe you're approaching retirement. Maybe you started a new business. Or maybe your income looks different than it did last year. Your portfolio should reflect your current life, not last year's assumptions. Now, let's talk about what you're preparing for the year ahead. Because 2026, according to most major forecasts, will be a transition year. After nearly 2 years of tight monetary policy, central banks are expected to pivot. Rate cuts are on the horizon, not aggressive ones, but steady, measured reductions as inflation settles closer to target. That shift alone could unlock performance across multiple asset classes, equities, bonds, and even real estate. Global growth is projected to moderate but remain healthy, somewhere around 3%, with Asia driving much of that expansion. The US economy looks stable. Europe could finally see some recovery as energy prices ease. And emerging markets, once again, are stepping back into the spotlight as currencies strengthen and capital starts to flow their way. But perhaps the biggest ongoing story is technology, specifically artificial intelligence. The difference in 2026 will be application, not speculation. We'll see less talk about AI potential and more about real productivity gains. AI will be embedded in manufacturing, logistics, healthcare, almost every sector. The winners won't just be the flashy AI developers, but also the companies providing the infrastructure. The data centers, the cybersecurity platforms, the chip makers that keep it all running. And right alongside technology, the green transition keeps gaining speed. Governments and corporations are doubling down on clean energy, electric vehicles, and storage technology. These aren't short-term fads anymore. They're long-term growth engines. Consumers, too, are adapting. Inflation fatigue has shifted behavior. People are more value conscious, more digital, and more selective. That means companies with strong brands and real pricing power will continue to outperform. Put it all together, and you have a 2026 environment that rewards balance, not extreme risk taking, but smart diversification and readiness for change. Of course, none of this works without the right tools. Rebalancing effectively, monitoring performance, and executing trades requires access to data and a reliable platform. One trading app that really stands out for its combination of usability and sophistication is crystalballmarkets.com. It's world-class, modern, and designed for traders who want institutional-grade power in a user-friendly format. If you're ready to take your portfolio management to a higher level, it's worth exploring. And if you're still building your knowledge base or just love learning about markets, Crystal Ball Markets also has an excellent podcast series available on our ss.com. It's approachable, insightful, and designed for beginners and intermediate traders who want to understand how macro trends, trading psychology, and financial markets all connect. As we wrap up this episode, let's bring it back to the core message. Year-end isn't just about reviewing what happened. It's about setting up what happens next. Rebalancing is your chance to regain control, to strip emotion out of your investment process, and to prepare for a year that's shaping up to be dynamic and full of opportunity. The best investors don't try to predict every twist and turn. They build flexibility into their portfolios and stay informed enough to adapt. So before the clock strikes midnight on December 31st, make time to sit with your numbers. Review, rebalance, and reset your approach. Because balance isn't just about safety, it's the new form of alpha. I'm Sophia, and this has been Financial Market Insights for Traders. If you found today's discussion valuable, make sure to follow the show, share it with a friend, and stay tuned for more episodes that help you think like a strategist, not a spectator. Until next time, stay informed, stay disciplined, and as always, stay one step ahead.